Friends, this morning Bitcoin dropped below $90,000. And this is that moment. The Crypto Fear Greed Index has fallen into the extremely fearful zone at a reading of 11. And the market has lost another $1 billion in just 24 hours, and that's only liquidations. What are the real reasons behind this drop? Is a panic sell-off coming? And has the bear market officially begun? Subscribe to the channel, let's figure it out. Many people were waiting for Bitcoin to drop to $90,000, but this was voiced purely as a final liquidity grab from brave traders who kept holding longs, so the market could then resume its rise. You've probably heard this narrative from many so-called crypto experts. But let's take a look at the real picture. As of now, Bitcoin is down 28 from the local high. And what's most concerning is that we closed the previous week below the 50-week moving average, which is a key support during a bull market. We didn't end up here by accident. First, there was a correction caused by the longest government shutdown in US history, lasting 43 days, which led to an increase of $619 billion in US government debt. This prolonged shutdown placed the Federal Reserve in a situation where fears intensified about a pause in rate cuts. But the main problem is the specific decision that was made in Congress and signed by Trump. Under this law, Democrats did not get what they wanted instead. Officials were simply allowed to return to work, buying more time for negotiations. As a result, government funding has been extended only until January 30th, 2026. That means in just a little over 2 months, the US could once again face another shutdown. In addition, irreparable damage was done to the work of the Bureau of Statistics, as many employees were effectively on unpaid leave. Because of this, the Fed will likely receive no official economic data for October. As a result, they may have to hold the December 10 interest rate meeting completely blind. After several members of the Federal Reserve openly stated that under these conditions it's better to leave rates unchanged, the probability of this outcome exceeded 50, and at one point even reached 55. This led to a decline in the S&P 500. There isn't a drop as severe as Bitcoin's, but there is a risk of a daily close below the 50-day moving average, which had been supporting the current uptrend. Fuel was also added to the fire by news that SoftBank sold all its shares of Nvidia, the largest company in the world. They simply need the cash to finance a joint project with OpenAI. Similarly, billionaire Peter Thiel also dumped all his Nvidia shares. A careful viewer might point out that Warren Buffett bought $4 billion worth of Google shares in Q3DY. But there's an important nuance. In the same quarter, Buffett continued selling Apple and Bank of America shares. This marks the 12th consecutive quarter in which Buffett's company has sold more stocks than it has bought, and as tradition goes, Donald Trump put the final dot on this story. But first, I'd like to ask you to help promote this video on YouTube so more of your colleagues see it. The best way is to subscribe to the channel right now. Likes also work extremely well, especially if we can collect 1,000 likes within the first 24 hours after publication. The first unpleasant surprise is that China did not resume shipments of several rare earth metals, despite Trump allegedly reaching an agreement with Xi Jinping on this issue. For now, this isn't a direct problem, but it certainly raises the level of anxiety. If we remember that at that meeting Trump and Xi simply shook hands and didn't actually sign anything substantial, the questions arise on their own. But the main cringe move from Donald is postponing the promised $2,000 payments to Americans all the way to mid-2026. Previously, Trump claimed that tariffs would generate as much as $3 trillion, which is complete nonsense, since in 2025 total customs duty revenues are around $200 billion. But the main problem is that the crypto market was expecting this money now. Many market analysts drew parallels to Trump's helicopter money distribution during the COVID year of 2020, after which many stimulus checks went straight into crypto exchanges. Trump can be understood, though why give out money now if the congressional elections are only in the fall of 2026? That's why voter buying needs to happen in the summer of next year. And for now, Deceived crypto investors will just have to endure it. They've survived many corrections before, and they'll somehow survive this one too. Everything I've just told you regarding news and analytics, my Telegram subscribers received much earlier. You can also become part of the CoinPost community. All you need to do is subscribe to my Telegram via the link right below the video. Thanks for your support, and let's move on to the forecast. What you're about to hear now is something you'll find almost everywhere on Telegram, Twitter, and YouTube. That this is just a correction because Trump is not interested in a crisis and won't allow it. That the Fed will stop quantitative tightening on December 1. Rates will still be cut, and the Lil can start quietly printing money to save banks, meaning this is just a strong correction, and at the end of the year, a null bullish. Arthur Hayes has already published a new article full of hopium. Tom Lee recently said this is just a correction, that two large market makers are facing liquidity issues. Overall, he remains very bullish on Bitcoin, and especially on Ethereum. It all sounds great, and in some places even rational, but remember fall 2021, or January and February 2018. Back then, none of the top crypto personalities said that a bear market had begun. Everyone just kept listing new reasons why the crypto market was about to return to growth. Tom Lee especially embarrassed himself at that time, promising bullish continuation almost to the end of 2018, while Bitcoin collapsed from $20,000 down to $3,000. After that, he stated that he would never again make public Bitcoin price forecasts. And of course now, he doesn't even recall that story. He just promises new growth, because he has no other choice due to Bitmine, the company that loaded more than $10 billion into Ethereum. And today, the top two cryptocurrency dropped to $3,000. I'm not going to give you financial advice or feed you hopium. I'll simply share my personal opinion on the crypto market. For a full-scale bear market to begin, we need some kind of catalyst, like the collapse of ETH in 2022. So far, no such global event has taken place. Potentially, this could be mass sell-offs of Bitcoin from government agencies or corporate crypto reserves. I don't think Michael Saylor's strategy will collapse. He has already sat through one bear market and can do it again. But when it comes to other companies, I don't have that same confidence. Until that happens, and based on historical data from the beginnings of previous bear markets, we still have a chance for a bounce back to $100,000. Yes, I can't know whether this move will start from current levels around $90,000. We first dipped to $85,000. But it is around the $103,000 zone where it will become absolutely clear whether the uptrend continues or if we are dealing with the start of a bear market. A breakout and consolidation above $103,000 would indicate that Arthur Hayes and Tom Lee are right, and that I'm just spreading unnecessary fear. But if resistance holds and Bitcoin returns to correction, then, personally, for me, this would be a very strong signal that Bitcoin's return to the big game will only happen after a move somewhere around $50,000 or even lower. Why do I believe in a bounce? First, it's the SP 500 forecast for 2025, which aligns very accurately with reality and shows a correction in the fall, followed by a new all-time high in December. The stock market genuinely looks much stronger than the crypto market, and its return to growth would eliminate at least one reason for Bitcoin to continue falling. Second, it's a statement from the U.S. Treasury Secretary Scott Bessent, who said that a trade deal with China could still be signed by November 27th. Third, the probability of the Fed pausing rates on December 10 is currently around 50, and there are still 22 days left for investor sentiment and Jerome Powell's stance to shift toward continued monetary easing. At the same time, you need to understand that all of this is only temporary reasons for optimism, while global problems in the markets continue to accumulate. I recently released a video about what's wrong with the artificial intelligence bubble. If you missed it, you can watch it right now via the link on your screen. Thanks.